What's going on, traders? I'm Devis from Trading with the Bulls, and on today's Secrets of the Bulls, we're going to be going over the importance of scaling in. Basically, we're going to be taking little bits of profit along the way of our trade, so that way we compound our accounts and always minimizing our risk. But before we do that, go ahead and drop a thumbs up, subscribe, and comment what Forex related topic you want me to cover next. Okay, traders, so today we're going to be going over the importance of scaling out on your trade. So basically taking percentages of profits or little bits of profit basically throughout the move of, what your original target is. So let's say you're going for 300 pips, maybe along the way of that move, you take some percentage of profit from that original trade. So is it important? Should you do it? Basically, I do it with most of the trades I take, especially when I'm swing trading. So maybe when I'm going for, like I said, in this particular case, I was going for 272 pips. That's a lot of pips. But I always want to secure that I'm taking some profit so I can minimize my risk. In this case, we're going to be going over this trade, and you'll see that basically it never reached my target, and now it's almost back to my original entry. So basically, if I never took any percentage of profit, or if I just let that trade run this whole time, I never would have reached my target, and now I'm about to break even and I made no money. So that wouldn't have been a smart move. It was a good trade, but basically it never reached your original TP, and now you're taking no profit. That makes no sense, guys. So let's go ahead and basically, I'm going to go over briefly why I took the trade in the first place. So here in this daily, we have basically the same thing that we saw on last week's video, which is, let me draw it out here, draw a line. So, you can see it very clearly. You have that support, broken, now turned resistance. Very, very clearly here. The same example that we saw last week. And then if you want to get maybe into the entry, I'll go over that briefly here in the 4 hour. Guys, there's not much to see. If you have that resistance drawn out, you can see that clear rejection. Anytime it reaches this price range, you start seeing bearish momentum. You start seeing those wicks to the upside. Then over here, you get this big bearish engulfing. Then right here, you have a double top and another big bearish engulfing. So that was enough for me to take my entries right here at the 74.100. And then you saw a triple top, so you did see just a little bit of drawdown before again shooting down for over 200 plus pips. So that was a great entry. That's a classic trade. That is one of my favorite setups. And let me just go ahead and delete this line. Okay, so we got that great entry, and now we're on our way in profit. So where do we go ahead and start basically taking profits, or do you go ahead and start taking profits? And I do, and I'll show you what I do. Basically, once my trade is in profit, a good 25% of the way, 30% of the way in, I basically just gauge it by ear. First thing I do is I put my stop loss at break even. I mentioned that on last week's video, and it's important. And like I said, we're always looking to minimize risk, and we're always looking to preserve our capital. So we're always looking to minimize risk. If it hits our break even, our stop loss, then we'll go ahead and maybe look for another entry. That's not a problem. It's not a big deal, but it's better than getting stopped out if the trade doesn't go our way. And you were maybe 200 pips in profit or 100 pips in profit, and instead of even taking any of the profits out, you got out of the market with a loss. That's not what we're trying to do here. We're always trying to compound our accounts and slowly growing, as opposed to just shooting for these wild trades. So we're not going to be shooting for wild trades. We want to go ahead, and once we start to move into profit, what I like to do personally is, let me just go ahead and bring out the ruler and measure out. In this instance, what I did was every 100 pips. So right here we got 100 pips. Every 100 pips, I took 40% of my account out of the market. Go ahead and close this. And this was a great trade. It was a great entry, but as you can see, it never reached my original target. So basically, since I never reached my target, I would have never closed out my trade, and I would have never made the profit. So instead, what I did was, once I saw that I was 100 pips in profit, and as you can see, this was some point of rejection, I went ahead and I closed out 40% of the account, or 40% of the trade, I'm sorry. And then once that trade kept going down, again, you don't need to close the whole trade. You can keep letting it ride for more profit, and that's how you slowly start to compound your account. So I got another 100 pips down. We closed the 40% of that account, and then that 20%, I was gonna let it ride down to its original target, 272 pips, but it never reached that goal. It ended up finding some support here around the 71.3500, basically a little bit lower. So right around here, it found some support, and now it's basically very close to our entry. It is the weekend right now. I still have that 20% running. I didn't close that yet because the market did spike all the way up, so we could just be seeing a retest here to these lower highs, and we could come back down for some more lows. So let's see how the market opens up, and maybe we can go ahead and look for some more sells if we start to see some rejection, or if the market has slowly transitioned into a buy. So those are some of the things that we're going to be gauging. But again, you want to take a look at the importance of stop losses, again putting them in break even once you're in profit. And of course, if you're going for big moves, if you're swing trading, you're going for 300 pips, always take some percentage of profit along the way. Again, minimize risk, compound your account, and that is how you're going to be profitable and consistent. Thanks for tuning in, traders. Don't forget to comment what topic you want me to cover next. Hit subscribe, and I'll catch you on the next trade.